Hi traders, Nick Shaheen here, recapping the week of action ending 10/24/2014. An epic week. By that I mean it was a big week. Let's start with the scoreboard. Today, Friday, Dow, SPX, NASDAQ up 0.75%, just washing it out. Small caps, not as optimistic. In fact, they dragged all day. They were red a big portion of the day. I do pay attention to that, and I'll tell you why. They were up 0.2%-ish. So the one thing in the morning, we had a pretty decent open. The futures were red, but we knew they were going to be flattish by the time they opened. But the VIX was too strong, because we had a decent open. We turned green immediately, but not by much. But we were green, and the VIX was still up 1.5%. And so we were trying to trade the market. We were trying to see if the markets were trading with the oil or with against the TLT, with the TNX, the rates. It was unsure. It was like iffy all. But one thing I knew, that volatility was still there and hung around until the end of the day when markets ramped and then decided to break down, but not until late. My bet would have been that we're going to sell into the close because people were going to be nervous going into the weekend. More days, more possibility for headlines to come out. But they were comfortable with the fact, maybe they were comforted by the fact that one of the nurses is actually cleared from Ebola. So that's really good news for her. Even though we had another gentleman who paraded all throughout New York when he was he had Ebola. So, but then we were comforted by news that it's not contagious as other viruses. Anyway, so the bottom line is positive day to end one of the most positive weeks in probably years. I'm sure somebody has the stats out there somewhere. So scoreboard. Let's look at scoreboard via charts. These are the small caps. That's the candle. This is 1 year, and these are each candle 1 week. One thing I want to note is the volume, not as big as last week when we bounced hard, and that's why I'm listening to the NASDAQ. Last week, small caps, everything was selling off on the test, and the small caps were the first ones to say, hey, it's not that bad. They turned green for a couple of days before the other indices joined. That's why I'm paying attention today, that they were hesitant all day. They were with the VIX saying, hey, I'm not so certain what's going on next week. And I'll tell you what's going on next week. So regardless, it was a big week for the small cap, and now the trend is still down, but at least we see the green line. We are breaking, we closed like right at it. So that's good positive encouragement. But we didn't clear it, but we're still in that those two little red trends, and that's how it does it. See these bounces, they're very steep, but it's been choppy, so I don't know if it wants to chop down from here. I'm not certain. It's a possibility, so it's not certain. That's why it was not up a lot today. So let's go to something that was up a lot today. That's the SPY, which is the S&P, and I use the SPY to show here just so we can appreciate the volume, as about half of last week. So last week's bounce, that was a bounce. It was an ugly candle. A red candle, but it was a beautiful candle given the possibilities. It was a big test, and we rejected the test on big volume. This week, but half as much volume, even smaller than the week before. So, but it's still, I can't take away from it. Look at it. And it closed above that capping trend. And it recovered this line right here. That was support for so long. So is it now resistance? They say what used to be support will now become resistance. Why? Because psychologically people will start looking for it. So important week next week. To add to the importance, the Federal Reserve event in the middle of the week. So we know one thing, the QE is going to end, although some people this week they decided to throw in on CNBC that, oh, now we have an idea of possibly more QE. I don't see that happening. And I don't believe there are a lot of people expecting it, but if there are, then we're likely going to sell off in the middle of the week because the Fed is not likely to add more QE. They just got out of one. Why would they want to get back into one when they're already accommodative with the rates? And they told us we're not going to raise rates for umpteen years. So they need something in the bag. They need a weapon in the holster. They can't just pull out all the weapons and show them. So I don't believe there's going to be QE next week. If there is one, look out above. I'll be very surprised. Look out above. Cover your shorts. But most likely there's not going to be one. And the markets are lined up with the easier path downwards. I won't know for sure until Monday morning, but I took a peek into next week, and it looks like the Google is at resistance, for example. The IWM is at a magnet with downside pressure likely. The SPX is at resistance, and it's lined up. The open interest is lined up towards the downside. It'll play between 1925 and 1950. And so the markets are lined up to play lower than this week's close. Apple's resistance this week defied gravity. That's the one buffalo. You know, I said don't short it, but the options markets say they want it at around 100. They were wrong, and they rolled up. Still at 105, which was the upper end of our resistance this week. It's at it, and next week it's the same place, 105, 106. They don't want it higher than that. So that means that Apple's also likely to be lower. However, this week that didn't turn out to be. So I'm not shorting Apple. It's good to go a few longs if one wants to go long via some Googles and some Apple companies that have already reported, but nothing too serious. So next week, the game plan, very volatile, so you have to choose cautiously the longs via some credit put spread perhaps and some good names. Apple, Google come to mind because they've reported and they're beasts. And also maybe build up some shorts. In other words, throw out some credit call spreads on the indices in general to hedge those longs. This way, if something happens, then you can unfold the whole thing for about even. So one thing to do it also is if you want to throw the shorts a little out in time, and so you can go shorter in the credit put spread or vice versa, go longer in the credit put spreads and lower, and then go shorter in the credit call spreads. Play with time. And as far as options are concerned, that'll give you an edge. Anyway, so next week, very important because we are expecting a lot from the Fed perhaps, and if so, they're going to probably disappoint. So I would be geared towards downside. So make sure to have hedges whichever way you play it. Surprises do happen, and we can run up and run down. And caveat, of course, reminder, headlines trump everything. Headline comes out, they're going to sell everything, they're going to buy everything. It's temporary, but nothing changed fundamentally this week. Really nothing changed. What we did is a round trip in sentiment. It first got aggravated by some Germany bad news a couple weeks ago when we started the sell-off, and this week we got some good news. So I need a third report in order to break the tie. So which is it? Good news, bad news. Until then, the thesis does not change. We have room for some upside. The downside